Hello again, everyone. I'm Sam. I'm with NATP. I am joined today again with Eric Green. Eric is with Tax Rep Network. You have probably heard us talk about Tax Rep Network quite a bit if you've been tuning into these Ask Me Anything broadcasts. If not, and this is your first time seeing Eric, do you mind giving a little introduction and telling us about yourself?
So I'm Eric Green. I'm a tax attorney. The focus of my practice is civil and criminal taxpayer representation. I founded a law firm, Green and Sklar's. It's been almost 9 years now. We're 23 people in 3 offices in 2 states. And I also founded Tax Rep Network, which is a coaching program for accountants and attorneys to build an IRS rep, practice.
Perfect. And so for anyone who has not seen any of our Ask Me Anything broadcasts yet, little recap of what we do. We have Eric here who is answering questions about representation. We have a few that were submitted earlier from some NATP members and some other people who Eric has worked with. And if anyone is joining right now and they have a question about representation or really anything else that Eric might be able to answer, we will take it on the fly. So please feel free to comment on this video if something comes up or you would like a little more explanation on something. So Eric, let's just jump right in. The first question that we have has to do with the Fresh Start program at the IRS. And so this person wrote in, I keep hearing people ask about the Fresh Start program at the IRS, but when I called for a client and finally got through, the person said there's no such thing. Can you help me there?
Okay. This is one of those things that just irritates me. So as background, the Fresh Start program was in 2012. And what it did is it revamped a lot of how the IRS dealt with taxpayers in collections. So for instance, when we calculate an offer in compromise, it used to be 48 months of future income. And if you had dissipated an asset, and Sam, what a dissipated asset is an asset that the client had that they should have used to pay the government, but they used for something else, like they paid back mom and dad's loan or they paid off their credit cards, that kind of thing. That used to be, if they found that in any of the open years with balances, it had to be added back to the offer. Dissipated assets were offer killers. In other words, usually the person that spent the money, now it gets added back to the offer. They no longer have the money and they can't do the offer anymore. In 2012, they rolled out this Fresh Start program. They reduced the future income from 48 months to 12. For dissipated assets, only the last 3 tax returns. That was it. Anything prior to that, they would forgive. And so it made it a lot easier for taxpayers to get an offer done. The Fresh Start program is gone. Those changes are now embodied in the Internal Revenue Manual. They're permanent. There is no program. The problem, and what irritates the hell out of me, Sam, and you should be around when I'm like driving with my wife and it comes on the satellite radio and they're like, the IRS has a Fresh Start program. And I'm like, driving, and my wife is like, stop.
Change the station.
Right? It just irritates me because, I mean, they're lying. There is no Fresh Start program. It came and went. The changes are permanent. It's a marketing scam is effectively what it is. So if you call the IRS and talk about Fresh Start, first of all, half the IRS wasn't even working there in 2012. So they have no idea what you're talking about. If they're old enough because they can't get out yet and they remember what you're talking about, they're going to make fun of you. So no Fresh Start. All right. Those changes were embodied in the Internal Revenue Manual. They're there. And I mean, I'm sure you can Google and get the details of it if you want. But yeah, there's no program right now. That is gone.
Do you happen to know off the top of your head about when that ended and got rolled into the code?
Well, it was it was announced in 2012, yep. And it wasn't like it was a time like we're going to do this for. It was simply this is the program, and it just made the changes. So it's not like it ever really ended. It was never really a thing. It was, but because the IRS called it that, it allowed people who wanted to market to say, there's a hurry up and get in. There's a fresh start program. It's going to expire any day. There was the threat that they could, do it for a little while and then unwind it.
Mm-hmm.
They didn't. Right now, what we have, I guess, would be similar is when COVID started, I think it's IR 2020-248. It was the changes they made to kind of help people who were struggling.
Mm-hmm.
Now, it's funny, all the changes they made for COVID were if you had an ability to pay, they made it easier to pay. They didn't make it easier to do an offer. They didn't make it easier to be uncollectible. So I just found it sort of amusing that basically it's like, if you want to pay, we'll make it easier to pay, but that's pretty much it. Those changes, which were increasing the amount of a streamlined installment agreement, which is one, Sam, where you don't have to submit any financials. You literally just call up and set it up. It was $50,000 for field and campus collections. For campus, they had a pilot program going for $100,000. This IR 2020-248 increased it to $250,000. In talking to the SBSE commissioners, they are evaluating whether to make it permanent or whether to roll it back now that they feel they're kind of past the worst of COVID.
Mm-hmm.
That is still right now it's still in place. Whether that will stay there is an unknown.
Okay, interesting.
Yeah, but there's no fresh start program. It's the program, it's done, gone, it's permanent. You move on.
Got it. Second question for you then. So talking about your podcast, Eric, this person, I heard you talking on your podcast about your schedule. I'm curious about this now. Can you explain how you manage this and how you stay motivated when at this time of year, I just want to go lay out on a beach? Very relatable.
Well, there are times I want to just go lay on a beach too. So anyway, for those of you who don't listen to the podcast, what's wrong with you? But no, for those of you who don't listen to the podcast, so I've talked about my schedule. And so my schedule, and where it came up is I had a question come in. Okay, how do I run a $5 million law firm, a multi-million-dollar coaching program, publish 3 books a year, and do the podcast? And I'm married and have 4 kids. And my wife is tenured faculty at NYU. So she's busy too. So the answer was, I don't sleep. No, what I do is I've never been a big sleeper. So I'm in bed at like 9:30, 10, and I'm done by 10:30. I will usually wake up on my own, no alarm, around 4:30. Between 4 and 4:30. In fact, if I ever go to 5:15 and I wake up, I'm like, wow, I slept in this morning. Because I just figured my body needed it. But I will get up. Generally what I'll do is go through my email. If it's a workout day, I'm at the gym at 5:30 because I'm home at 6:15 to make sure my kids are out the door at 6:30, or up at 6:30. They're out the door at 7 for the bus, and then I'm at my desk at 7:20. If it's a non-workout day, I can get a lot done from 4:30 to 6:30 just working, and that's how I get, the books done. And so for me, here's what I would suggest. Everyone keeps saying, well, how do you stay motivated? I'm just going to suggest something. Motivation is nonsense. Motivation comes and goes. In fact, I lose motivation 10 times a day throughout the day. It's not about motivation. It's about discipline. All right. If you're willing to get up, and you don't have to be up at 4:30, but look, if you have to be at your desk at 9, you could sleep until 7:30. But what if you got up at 6 and you had an hour and a half to work on your marketing and building your brand, or getting that project done, or that website, or whatever? It's really about the discipline, right? And maybe it's from college football, maybe it's from being a power lifter. The people that compete understand it's not about motivation, because there are days you do not want to go to the gym. You don't, I don't, we all have those days. But if you're going to play at that level, you get up and you go anyway, right? You're going through the motions, you go through the motions, but you get up and you do. And so what I would suggest to anyone who's got something that they want to achieve, whether it's building your tax practice, building a rep practice, getting the book published that you've always wanted to, whatever. You figure out what you need to do, you break down the steps, and then you get up every day and go to work at it. And I got to be honest, if you're a night owl, after dinner from 7:30 to 10:30, you know, I mean, you come home at 5, spend a few hours with the kids, 7:30 to 10:30, 3 hours a night, even 4 nights a week, 12 hours a week, you can do a lot of damage. You can accomplish an insane amount, but you need the discipline to sit down and do it. And I've just found that I want to accomplish these things enough that I'm willing to force myself to go do it. And in fact, quite frankly, I couldn't sleep in past 5:30 if I wanted to. I'm wired for it now.
It's almost about prioritization rather than motivation, it seems.
Yeah. The way it was explained to me is, you know, everyone has this dream. I want to have a 25-person law practice, $5 million, and I want to make $750 a year. It's a dream. Okay, what do I need to get there? All right, now you have a plan. All right, and then when you lay out the steps, what else? What do you want to do? Just get up and execute the plan. You know, go through the steps. So the difference between dream and plan and accomplishing it is simply breaking down what you have to do and then go do it. And that's it's a hard thing for people to do. I mean, don't get me wrong. I'm lazy. I'd love to lay around and watch TV. I love to lay around on Saturday and Sunday, watch football all day. I've got stuff I got to accomplish or want to accomplish. So I would suggest that don't focus on motivation, which does come and go for all of us. It's about laying out what you need to do and disciplining yourself to go and execute that.
Interesting. That's good advice for a number of topics that you could apply that to. So thank you for sharing that. So this next one, you have taught for NATP in the past, and you have done some outstanding programs about representation. We have a lot of them in our on-demand webinars right now. And if people are looking, you are going to be joining us for one of our in-person events later this year. But keeping that in mind, that there are a lot of education courses out there. What this person is asking, what's a good starting point for someone new?
Okay, and we've done a lot. I mean, every single year with NATP, we're always adding and adding. In fact, I should probably go back and go through what's in the library. But we've done here's what I would suggest. There are for representation, there are two real main pillars, audit and collection. We've done 8-hour programs on both of those. And so I'm not sure which year we did which, but even if it's a year or two old, the information is still basically good. If you go into the NATP on demand for CE, look for the 8 hours on audit and 8 hours on collection. Once you've gone through that, all of the different webinars we've done, payroll taxes, criminal investigations, innocent spouse, penalty abatement. Here's what I would suggest. Find something that interests you and take that. Or if somebody calls you and says, I have a payroll tax problem, and you say, well, because you listened to me, we take a $5,000 retainer because we got to work on the company and we have to deal with the individuals who are responsible. When you get that $5,000 check, I would go out to the NATP and take the payroll class, right? So at that point, it's more of what have you got on your plate and what interests you. And same with marketing. You don't have to market for everything in representation all the time. If you find you really like the strategy of innocent spouse cases and helping your client build that, I mean, my associate loves those cases and she's really good at it. I told her, market for that, right? Put info out on that. Go for the cases that you want. I mean, for instance, if you hate penalty abatement cases, I wouldn't be marketing for penalty abatement cases. I would market for the cases that you want. Same with the training. I think look at the topic, see what interests you, because one is you'll absorb more. And if that's what you want to do or think you want to do, that's where I would go. But I start with the audit and collections, either order, because that'll give you the basics of representation. And then after that, it's, the buffet of kind of what interests you, what grabs you.
That's good advice. And that's kind of the beauty of, I guess, being on your own and getting to pick and choose what you like. So that's exciting. And another reason people should get into representation.
Well, we did this last month. Remember about your 1040 practice? It's your practice. Well, if you're working for somebody else, it's not your practice. But if you're working for yourself, it's your practice. Work with the clients you want. If you have D and F clients, and we know who they are, the ones who don't want to pay, they're whining, it's soul killing to deal with them. Fire them. Yeah. Just because someone calls us doesn't mean I'm taking them as a client. Now it's a little bit easier for me because I've been doing this so long and my practice is established enough. It doesn't bother me to turn people down. There was a time 20 years ago where I would have taken anybody that walked in the door. All right. They could have been a sign on their head that I'm a toxic client, and I still would have taken them because in the hopes that I get some money. So it gets a little bit easier the longer you've been doing it. But if we all spend way too much time doing this. Do what you like. I mean, if you're gonna have to do this, do the stuff you like, but don't do the things you don't like.
Right. Yeah. As simple as that. Yeah. So next question then. This one is a little bit more technical. Eric, my client's business account was levied without notice yesterday. They were paying on an installment agreement and fell behind. Does the IRS have to send a final notice before levying? You mentioned that in a collections program you did.
Correct. So you mentioned they were paying on an installment agreement, and it was the business account. So what they didn't say, but what I'm betting is it was a payroll tax problem. They were in an installment agreement. They fell behind. I think is that what they said? They fell behind.
They're paying and fell behind.
And then they got levied without notice. So here's the way this works. And if you've taken the payroll class with an ATP, you'd know this. What happens is whoever asked the question, you're absolutely right. For collection, they send the billing notice, they send the threat to levy, they send the final notice, and they have to give you the 30 days to file the collection due process hearing, or else they can levy and hit the account. If you've had a payroll problem and you took a collection due process hearing, which is an appeals hearing, and within 2 years you incur another debt or you default, like they did here, they said they fell behind. It's a little unclear if they fell behind in the payment plan or in their current taxes. But what happens is they don't have to give you notice. They can levy immediately. It's what's called a disqualified employment tax levy. And in fact, when we help clients resolve their payroll tax issue and they're in an installment agreement or maybe uncollectible, we do warn them in our closing letter, and we also verbally warn them. If this happens again within 2 years, the IRS can levy without notice. They don't have to give you notice. And the rationale behind this is you've already been through this. You've already had your hearing. You know this. If it happens again, I mean, you'll still get a final notice. You'll still get the right to go to a hearing, but collection doesn't have to stop. They can move immediately. And part of it is because it's payroll taxes, which is a hot button item with the government anyway. So I believe it's probably what you're describing as a disqualified employment tax levy. The government's allowed to do it. And in fact is urged, the revenue officers are urged to do this. Right? And because if you're going to basically steal the payroll tax money, they would rather, it's so funny. I get this all the time. Are they trying to put me out of business? Would they rather I lay everyone off? And I tell them, yes, that's exactly what they want. Because if you think about it, yeah, you're employing people, but you're stealing the payroll dollars. So you're right. The government would rather you go out of business, go find a job, and send everyone else to go find jobs with employers that will not steal their payroll taxes. Yes, you're 100% right. I'm glad we're on the same page. They're not happy with that answer, but the payroll taxes are a hot button issue with the government. But yeah, no, you know that that's probably what happened. They either fell out of their agreement or they stopped depositing effectively incurring another debt, and then the government doesn't have to give notice.
Interesting. That's good to know. Last question for you then for today. So this one's a little bit longer. My client is divorced and does not believe she should be responsible for the tax debt. Her husband ran up because of his gambling issue. No judgment there. But so they filed an amended return to be married, filing separate instead of joint. Can you explain why someone would file for innocent spouse instead of amending the tax returns?
Because you can't amend them.
Okay.
All right. So I'm sorry to tell whoever this is, but those amended returns are not going to get processed. They're going to get sent back. So the way that this works is the default is married filing separate. A married couple is allowed to elect to go joint. Mm-hmm. Once you elect to go joint, you cannot elect out of it. So here, the only available relief for, I'm betting it's the wife, although I think that was a little unclear. The spouse who believes they're innocent. Mm-hmm. The same-sex couple, maybe it's the husband. I've had both cases where the husband's the innocent spouse and the wife or the wife. But the person who believes they're the non-liable spouse, mm-hmm. Once you file a joint return, you're stuck with joint liability unless you can get innocent spouse relief. So one piece of advice that I've given on the podcast, and I think we might have covered this months ago, even here. If you, let's say it's October, the deadline is tomorrow, and the couple, you do the return, married filing joint, and there's a liability, and you call them up and say, look, you're going to owe $30,000. Can you pay this? And they're like, yeah, no, we can't pay that. Normally, I'd say, well, you have to stop and do the collection analysis because, for instance, so I'm an attorney. I have malpractice insurance. We have errors and omissions. We have all the insurances we can have. I don't own my home. It's in my wife's name. Mm-hmm. You know, let's say I file a joint return and there's a joint liability. And now I've dragged my wife into it and the equity in the house and her 401k and everything else. Are we better off married filing separate? Even if I end up with a higher liability, I may be a perfect offer candidate. Mm-hmm. You know, here, if the husband has a gambling problem, he may have been better off married filing separate, mm-hmm. and he may be uncollectible and leave her income, the equity out of it. So you have to go through that analysis. Now, I just told you this is taking place on October 14th. So everyone on this is going to say, yeah, the hell I am. I'm pulling my hair out right now. Here's what you do. You explain to the couple, we're going to do married filing separate. All right. Next week, after I've had a few days off, you're going to come back with this list of documents and we're going to go through the collection analysis. Why? If I do married filing separate, I can always amend to go joint. If I do married filing separate and it's 30, I do married filing joint and it comes down to 15. I'm making this up. And they can pay the 15. Well, then I'm much better off that. I can always amend from separate to joint. If I just knee-jerk file joint now, they're stuck with it. Interesting. Right? And it's going to be very interesting in a year from now when they're getting divorced and someone like me contacts you and says, hey, Miss CPA, can you explain why you filed joint? Mm-hmm. And you know where we're going with this, right? In other words, my client's not paying this. Your malpractice will pay this. Because I don't have any correspondence where you told them that she had the right to go separate. She got a form shoved under her nose to just sign for the e-filing. So if you're up against the deadline, you're better off knee-jerk separate, married filing separate, and then you get them in, charge the consult fee, do the analysis, mm-hmm. and say, hey, you're better off joint, we can amend. Or no, we're better off separate. Let's leave her assets out of this and try to set you up for an offer and compromise. So push comes to shove, you're better off going married filing separate, knowing you can later amend to joint. You cannot go the other way. So unfortunately, in this person's situation, I suspect you're going to get those returns sent back to you, basically telling you they're non-processable because you cannot elect to amend to go from joint to separate, and that's why people do innocent spouse, because they can't amend.
So there really isn't a good solution in this case. They just have to.
Unfortunately, it's going to be innocent spouse, which is going to be long and drawn out and expensive. Great for you, the rep, bad for the couple.
True. Yeah. Perfect. Well, that's all of the questions that we had submitted. It looks like there is one that came in for you, Eric. You created, there was a conference this person is talking about, Yukon, at, is it Quinnipiac University? Does that sound familiar to you?
Yep. So any idea when the Yukon program will be on 2020? This is from George, or Jorge. I apologize if it's George. In the past years ago, you created the conference at Quinnipiac. Okay, so yes, here's what's going on. So there was discussion for the New England Rep Conference of doing it with UConn, who I have the certificate program with, and moving it to the Stanford campus. We concluded the Stanford campus cannot house it's not, the rooms are not large enough to actually take. Oh, and so it is George. Okay. Thank you, George. So the UConn campus isn't going to work. So June 10th, the full-day criminal program will be at Quinnipiac, and I got to talk to the NATP about a discount for NATP members. The New England Rep Conference, November 17th and 18th. Also, we normally do partnership with NATP. We'll be at Thursday. We'll be at Quinnipiac. Friday will be at the Omni Hotel in New Haven. We cannot go back to the casinos because they actually have no hotel rooms, if you can believe it. We could have meeting rooms. There are no hotel rooms for the dates. I'm like, really? Anyway, so yeah, so it's going to be at the Omni. There'll be information sent out, and again, I got to talk to the NATP again about arranging that discount for members.
Right, yeah, we have done that in the past, I know for sure. That is all that we have for today, Eric. Unless there's anything else you want to add, or as we're closing out, any final words of wisdom?
Nope. I know today's March 15th.
Yep.
You got 30 days left. And then everyone should go and launch their tax rep practice, and so you never have to do another tax season again.
There we go.
Right.
Perfect.
Good luck getting through the next 30 days, and we have a very exciting summer. NATP conference, the forums, the New England Rep Conference, a lot of cool stuff.
Yeah, a lot of stuff is coming back. We're really excited. So thanks for everyone for joining us, and we will see you next time. Bye-bye.
Bye-bye.